up, guys? Welcome back to the Diamond Hands channel. I just got a recent request to go over what a market structure break is. Now, I know I've done a video like this in the past, but it's a little bit blurry. I had too many indicators and it was a little confusing overall. So I'm going to try and make this one as simple as possible and straight to the point. I'm going to hop right into it. For my examples, I'm going to use Bitcoin and Ethereum. I'm just going to look at the daily chart. So obviously, the higher the time frame you're looking at for market structure is going to be the most reliable. But these same principles can be used for day trading, scalping, etc. So we all know when we have bullish market structure, we want to be printing higher lows and then higher highs. So another higher low here, swing point here. So that's bullish market structure. So you're expecting when this is coming down to have, a higher low again, which it did print here. But then we had a swing failure pattern and we rejected this previous high, like right around here. Right? And then we ended up making a lower low. And then we were making lower highs and lower lows ever since on the daily time frame. Okay, so what is a market structure break? Well, when you're having bullish market structure like that, you don't want this low to get taken out. Now, it's even okay if price was, say this candle had come down and wicked below this low right here, by the way, is at right around 39.6K. Say it came below and then ended up closing up here like it kind of did. That's still okay because that's what's known as a swing failure pattern. Price briefly traded below the previous low here, but then buying pressure was pushed the price back up and it ended up closing above that low, right? So where was the actual market structure break for this bullish momentum? In July 2021? It's when we printed that high in the beginning of November 2021. Well, it was kind of right here. So you can see this low where we didn't quite get to it beginning of December of 2021. Just price kind of like traded above for a bit. Had a retap as support here on January 10th. You can see it right there. But, failed to make a higher high. Couldn't even take out the resistance levels we were making here. So this was previously support here at 45.6. Right here was a market structure break. See where price on this daily candle, I'm going to zoom in. Price on this daily candle on January 5th, 2022 pumped up to right around 47K. And then there was massive selling pressure that ended up taking out these lows and ended up closing below it. Right? So now our previous support has now been turned resistance. As you can see here, when we finally came back up, we wicked above a couple times, reject, came up again, reject. So we couldn't reclaim that previous level. We kind of got faked out here in March, and it's been down only ever since. So yeah, the first market structure break is here, right? And then we were starting to do, pretty decently here. A nice little trend if you draw it there. Okay, so every time it came to these levels, price kind of bounced until we finally started treating it as resistance here, and then it continues down. Right, so that's the main market structure break there at 45.3K. And then again here, if you look at it on even higher time frame, if you're going off of this, higher high, higher high again, this candle here on January 21st, you can see we took out this low and closed below it, and that was the market structure break, right? So let's have a look at Ethereum and see if we can find another example. Let's go to this one. A little bit more cleaner. Yeah, so same thing from July of 2021. You had these swing points here. This was like a triple bottom scenario. going on in last summer. Price kept bouncing off of this level strongly, right around 1730. Ended up taking off here. So this was a bullish market structure break, right? So our previous high was here, which marked as resistance. It was an all-time high in May 2021, which was at right around 4,400. You know, price came down, triple bottom, higher highs again, you know, bullish market structure, higher lows. Comes up here on October 21st. If you look at the daily candle, you can see how it wicked up to that previous all-time high, rejected it, treated it as resistance, came back down. So we kept tackling it until we finally closed above. See that candle there on Friday, October 29th. Started treating resistance, and then finally this one here was the real market structure break. So that was the first one. This was like this one's even more important because it was a very strong candle. It has like absolutely zero wick. It just pumped straight through that previous all-time high, had a strong close. Little did we know the next all-time high we would print after that, only a few days later on November 10th, was, you know, marked the top of the bull market. That was our swing point. So you can pretty much go off of the same principles as we did Bitcoin. The charts are going to look very similar because the price action was similar. But yeah, if you look at that low we printed in September when we had that first pullback before the moonshot, this day right here, January 21st, I think it was the same day, had that, you know, strong pump, ended up closing this candle here. See how price came up, you know, really strongly. It was green, but ended up getting sold out and then end up closing red. That's what's known as an inverted hammer, and that's a very bearish candle. The next day, as soon as that closed and people saw that, they probably went short. And you can see here, so this is your first market structure break, probably the most important. See, we put this low right here, 2,600. Strong smack through, close below. Slight reclaim, but never really made it. Yeah, so basically you're just looking at lows and highs. You just want to, if you're looking for bullish market structure, you're looking for price to print higher lows and higher highs. And if it's bearish, it's the opposite. So lower lows and lower highs. And you'll just basically take your tool here. I like to use the horizontal ray right there. So we know that's our resistance, 32.95. Price briefly traded above, rejected this trend line I have going on, and went back below, started treating the level as resistance again, and that's your short trigger. So that was just so obvious looking back. You know, price came up out of, you know, above resistance, consolidated there for a moment, a couple days, ended up having a really strong close back below. And then once you started seeing this treating resistance, all you had to do was go short anywhere here, have your stop loss above there, and you could have targeted either here, right around 2640, or take out that low. Or if, you know, even it wouldn't be more aggressive, you could have had it even here. You know what I mean? And that was a 50% dump from that area if you were to go short here. Even here, from that take profit 2 of this low right around 2100 was still 35% against a 10% fear invalidation. Right? Unless you were lucky enough to see the trend here from the top to this point and just drag it, and you could see it rejecting. That was a clear short signal as well. I did not catch that, but looking back, now that you see these things, you'll hopefully be able to, you know, spot. So obviously it's much more reliable on high time frame. You know, looking back, if you went short at 3,500, you know, you would have been up big. Only like a month or two later, we were trading at $1,000 and below. you could have done that. 70% dump from that short trigger. So we're getting a little bit off topic, but I just want to explain what a market structure break is and how you can trade it, so you guys can spot it yourselves and hopefully make some money. All right, so hopefully I went over it, and I tried to be as brief as possible. Hopefully you learned something. If you do find value in the channel and the videos I provide, I really appreciate it if you'd like and subscribe. And yeah, have a great day.